Okay, let me also bring on board Sandip Sabharwal into this conversation to try and get a sense as to how he's looking at Trent in particular. Sandeep, the update was unenthusing, right? But it's also the valuations. I mean, you're trading at 90 times trailing 12 months, doing 18 and a half, 18 odd percent kind of growth. Uh, is that what's worrying the street? Is it just a valuation correction? And if so, do you expect that to likely continue sideways or lower in terms of the stock price?
Yes, I think that's the issue always with very highly valued stocks that even if there's a small disappointment, the stocks correct substantially. And even after the correction, the stocks look expensive. So I think that's the main issue with stocks which are very richly valued. Now, Trent as a company, it's a good company which has penetrated good segments of the market and is likely to continue to grow strongly. Now, what's defined as strongly is something which everyone has to analyze themselves because after reaching a particular size, it's not possible to grow at 30-40% continuously from there. So I think what normally happens in these kind of companies is that there'll be a big spike or big sell-off on positive or negative news. And then there'll be a phase of consolidation, and then people will watch the commentary of the company on the results and then take a further call. So I think that's what is likely to happen. One big downtick has happened. Now, if the overall market also corrects, it will obviously correct along with that. But uh, there's no at from these prices, I think there's no big downside or upside.
Well, crude, that seems to be, Sandeep, the big irritant. Once again, it's at elevated levels from where it was up until day before. Would you say that it makes sense to perhaps steer clear of this tactical trade that one was looking at when it came to city gas distribution companies, paints, or for that matter, OMCs, the crude-sensitive lot?
The crude will keep on fluctuating as it is. The kind of correction we had seen was unsustainable, like straight from 125 to 70. So obviously, uh, there will be some ups and downs. So it's unlikely that we'll see a big uptrend start in crude. So that's how I would see it. And the benefits of the downturn in crude prices has not actually percolated down yet to most of these companies which got impacted. For example, like aviation. This month, the aviation prices, the ATF prices were cut marginally because on an average basis, the big benefit will come next month, even if crude goes from 70 to 72, 73, like $3, $4 here and there doesn't matter so much. Obviously, sentimentally, in the market, it matters, but practically, the way crude has fallen, actually, these companies will be big beneficiaries going forward.
Sandeep, we've seen some pullback in IT companies as of now. Do you think this rally would sustain, given the fact that the overall sentiment on earnings growth is still muted for them?
Yeah, I think because they are hugely oversold, there are huge short positions globally in these stocks. And as the AI linked semis and other data center related linked stocks correct, we could see some further upswing in the IT services companies. So that's very much likely. The stocks are cheap in relative to cash flows they are generating, assuming that the cash flows do not decline hugely, even if they don't rise significantly going forward. I think some more pullback will continue, but these continue to, like I've said earlier also, the IT sector, especially the Indian services companies, continue to be more of swing trading or trading kind of bets rather than a long-term sustainable uh, return generating stocks.
Sandeep, are you surprised by the move in HDFC Bank? While, of course, it has had ripe valuations for quite some time now, but after the quarterly update, the move that one is seeing in the stock?
Not really, because the big downturn in stocks like HDFC Bank or some many large cap financials or even the IT sector has been driven by pull out of money from India and huge short positions, not only in India but in leverage, like stock borrowing and selling in the global markets, and also via ADRs for stocks, companies which have ADRs. Now, as that reverses, that reversal itself of positioning from extreme short to even neutral, not even net longs, could still take these stocks uh, higher. So I'm not so surprised because see, the stock price movements don't follow exact news flows because there are various dynamics at play. And Indian stocks and the Indian markets still continue to be uh, held substantially underweight and with substantial short positions by global investors.
Now let's revisit the charts of HDFC Bank. I mean, day before, of course, is when the big move happened. Yesterday, of course, in that choppy trade, all of that fizzled out. But Kotak and HDFC Bank, the both polar ends from day before's trade.
So I think HDFC Bank has recovered quite well. It's recovered almost 100 points in the last 1 month approximately. May end June start, the stock was at 725. We are almost at 825, 830 for HDFC Bank. It's been a steady uptrend for the stock price in the last 3 to 4 weeks. We've managed to break past about the series of major resistance. Earlier 775 to 800 was a cluster of a huge resistance for HDFC Bank, which the stock was unable to surpass in the previous times of bounce back. But this time around, we've managed to see that bounce back scaling past about this resistance. So the chart patterns on the near term for HDFC Bank are looking quite strong. And with this recovery of 100 points, it looks that, and it's also that the stock has not seen a major short covering as of now. So once the short covering move starts off, the pace of rally could probably intensify. So it's more like a long build-up or a steady buying, delivery-based buying, which has happened for HDFC Bank. Now, in contrast to this, Kotak Bank in the last, I think 1 week, 10 days post the news flow for the stock price has gone through almost like a 8 to 9% correction from 410, 420 levels. The stock has come back to that 380 mark. It's also fallen below the 50-day moving average and the 200-day moving average. So the chart patterns immediately for Kotak Bank have turned on the negative side, which means that the stock could remain under pressure over the near term. It's just that maybe the markets would probably try and look at balancing out. So if, for example, the private sector banking names see some bit of profit bookings, the ones which have performed very well, the likes of HDFC Bank, ICICI, IndusInd, etc., they could be at the brink of slight bit of short covering or rather profit booking. But the ones which have already seen a sharp correction like Kotak Bank, Axis, etc., they might not see a major kind of a sell-off further.
Okay, all right. Let me go across to Anurag Joshi. He's here with an ET Now exclusive. India's largest asset manager, SBI Fund Management, is entering the final stretch before its much-awaited public listing. Sources tell ET Now that SBI Fund Management is set to conclude its pre-IPO equity sale within the next few days, with the company likely to launch its initial IPO as early as next week. Anurag here with all of the details.
SBI Funds Management is set to close a pre-IPO equity sale within days, sources have told ET Now. SBI Funds is poised to conclude an institutional equity placement ahead of its IPO. The fund house is planning to launch its IPO as early as next week, sources tell us. SBI Funds is a venture between State Bank of India, India's largest lender in terms of assets, and the French asset manager Amundi. And it operates SBI Mutual Fund, which is the country's biggest asset management company. SBI Funds, sources tell us, has tied up commitments with certain global investors for the pre-IPO sale. And the fund house recently completed its roadshow linked to the IPO. In March, SBI Funds had filed its draft red herring prospectus with the Securities and Exchange Board of India and the exchanges. And in terms of the size of the IPO ahead of the launch, that's seen around $1.2 billion. So 10% equity sale is what SBI and Amundi are planning. It will be an offer for sale. So the valuation is also pegged around $12 billion. Both founders are planning to sell about 204 million shares. SBI Funds Management manages more than 12.5 trillion rupees of assets. And in November last year, both SBI and Amundi had flagged plans to list SBI Funds Management.
Thanks, Anurag, for that. Sandip, how do you look at the asset management companies? SBI Mutual Fund IPO expected early next week, and I think they're valuing the company at nearly 1.2 lakh crores.
Yeah, so asset management companies are the strongest bets for anyone who wants to play the capital market segment in India, because of the unique nature of the business vis-a-vis any other capital market play, be it exchanges, brokerages, etc. Because asset managers have annuity income, typically investors who invest do not redeem, and these companies keep on growing. So I think valuations is something people need to keep in mind. But overall, as a directional bet, I think asset managers of India are a good bet for long-term investors.
This entire theme, Sandeep, with regard to land monetization of PSUs, so RCF obviously in focus because of that, but give us a sense, any other companies which probably have large land banks versus their market capitalization, which maybe you're looking at, considering?
No, I don't typically invest in such kind of companies because the end point is always unknown.
I understand. Okay. Sandeep, in terms of auto, is that one of the ways you're playing consumer discretionary? And if so, how are you playing auto? Do you prefer the auto hang, two-wheeler, four-wheeler?
I think the entire ecosystem is well placed, both the ancillary companies as well as the OEMs, and also companies in the EV space, like some of them at least. So, because growth trends are quite strong, on ground feedback still indicates that consumer demand is holding up amidst all the news flow, etc. And the small risk which remains, especially for two-wheeler companies, is if the monsoons actually falter in the second half. So, which is something which we don't know about, and that could have some impact on rural demand. But I think one thing which I have noticed and which I think could play out is that when there is a substantial technological shift from, let's say, the IC to EVs, sometimes the replacement cycle is much more aggressive than if the same technology was continuing. And that could surprise many investors and analysts going forward. And that's something we need to watch out for.
And Sandeep, there is that other angle of E20 as well, right? A whole lot of chatter around social media about, the kind of impact that it has on your vehicle. But other than that, beyond E20, it's only Maruti and Hero which are equipped to handle that kind of fuel, so far at least.
No, E20, most of the new models are able to take that. So across manufacturers. So I think there's nothing like that. I think it's more a social media campaign which has picked up, and it picks up more because the more you write about it, the more likes you get. So I think most manufacturers over the last few days have come out and said that there is no real impact in even older or newer vehicles. And so I think we have to take it by that. So we cannot form opinions based on social media. And in fact, social media says that people are postponing car buys because they don't want to buy E20. How absurd can that get? So I don't think anyone thinks like that. And the sales growth of auto companies also doesn't reflect that.
Okay. Now, the oil minister, Hardeep Singh Puri, has announced that trials of E25 blended petrol are currently underway. He's dismissed claims of concerns over blended petrol. the minister said that the current blends pose no significant issues for vehicle owners or automakers, and a plan to introduce E85 in the near future could also well be on the cards. Listen in.
Somebody's suggesting that hum jaldi se E25 aa raha hai. We have made it clear we are doing tests. Those tests will take time. Once the reports of those tests are in, we will evaluate those. Then we will talk to the stakeholders. We will talk to the automobile manufacturers, because I neither make the cars nor the fuel. The car manufacturers are comfortable with E20. Each one of them has made a statement. The consumer loves the pet thing. We have got a rollout only of E85, and that E85 will take a little bit of time because new petrol pumps and all will come in. Yeah. So this is the situation. Yeah.
Okay, Sandip, also curious to know, because we're talking auto, the CV cycle has picked up very well. There's healthy growth across the CV players. You believe that this can actually last all through FY27? Is that something that you'd be comfortable kind of, giving us a view on? And second, would you play through the CV players again, Auto Ank? Would you play through the financiers? Because CV financiers also, we've seen a strong run-up over the last maybe 8 to 10 months.
So CV, most of the analysts are quite split on the growth rate which could be there. So because some price hikes were expected in July, many think that there was pre-buying, and that's why the numbers of the last couple of months have looked good. And overall growth this year for the CVs will just be 4 to 5%. On the other side, there are other initiatives being taken, like what the Delhi government has done, which could actually accelerate the replacement cycle in some CV segments. And then there's the entire electrification of buses, etc., which is also proceeding at a rapid pace. So I would think that people are excessively pessimistic on growth prospects of CVs, actually. So I think the pure play CV plays are obviously the Tata Motor commercial vehicles, Ashok Leyland, etc., or some companies which are on the EV space. My guess is these could do well. And the ancillaries are also good plays, I would think, because they also have the export story. So I think those are also some of those will also do well.
Kunal, very quickly on some of these names, which Sandeep also took, and Hero as well, right? You've seen a decent correction from the highs, 10 to 15%. Good time to probably go long on some of these names?
Yeah, looks like, because I was looking at the charts for Hero MotoCorp, Bajaj Auto. These are the two major stocks which had performed very well in the previous leg of the price uptrend for the auto stocks, and the ones which have been huge underperformers in this leg of the price correction for the auto names. So from the two-wheeler pack, I think Eicher Motors was one of the strongest one. TVS Motors had done very well for itself. But then the only two stocks which had underperformed were Hero MotoCorp and Bajaj Auto. On the indicator fronts, we are looking at a point where both these stocks seems to have come back into deep oversold territories, divergences on their medium-term charts on the RSIs, as well as a possibility that these stocks would come back into a trendline breakout after a pattern of lower highs and lower lows. So price-wise, I think they have come back towards a very attractive zone where traders could start building up contra positions. The only thing over here, the zing which could be missing is the momentum, because if there is no major short covering into these stock prices, you might see a very prolonged kind of a bottom formation process where the price damage may not be severe, but the price consolidation could probably be a little bit more extended. So I think that's what something someone has to watch out for. But otherwise, I think price-wise, both these stocks, Hero MotoCorp as well as Bajaj Auto, sub the 10,000 mark, both of them are looking very attractive.
Okay. We'll take a very quick break. We'll come back and discuss some more newsmakers. RCF, of course, is going to be on our radar as well after it unveiled a series of strategic decisions aimed at supporting its next phase of growth. We'll address that after this very short break.
Welcome back. And, RCF will be in focus as it's unveiled a series of strategic decisions aimed at supporting its next phase of growth. Land monetization is one of the key outcomes. Meryl's here with all of the details.
That's right. The board of RCF has just approved a series of board decisions that could reshape the company's future growth strategy. The board has firstly approved an FPO where it will be raising 1,500 crores through a fresh equity issue. Alongside this, they've also approved a major amendment to their memorandum of associations. They've significantly expanded the scope of businesses that it can undertake. The main object clauses here have been increased from earlier just 2 clauses to now 10 clauses, under which the company can now expand into businesses such as water treatment, recycled water projects, agrochemicals, and also warehousing, cold storaging, as well as logistic parks. But one of the biggest talking points, perhaps, is the clause 36 under this agreement. This opens up multiple avenues for land monetization as well as asset monetization for the company. Now, RCF currently has a land bank of approximately 2,000 acres, of which 750 acres is right here in Mumbai, that's in its Trombay unit, and 1,250 acres lies in its Thal unit in Raigad. So now with this new amendment, the company can choose to lease, license these assets. They can commercially exploit these properties, create SPVs, and also choose to monetize them via a REIT or an NVIT route. So overall, the 1,500 crore fundraise, the business diversification, and most importantly, this land monetization that has come up for RCF is looking to unlock greater value for the company in its coming years.
Thanks, Merin, for that update.
Quickly add, Sadiq, sorry to that. The fact that there's also a TDR involved here. So you've got around 80 crore of TDR which RCF holds, which is the value on the balance sheet based on annual report FY25. Of course, maybe there are some changes. Also, there's a 75 crore receivable on top of the 80 crore TDR. So just broadly, that's around 1 to 2% of market cap, not big. The larger piece, obviously, being the land which they are looking to monetize.
That's right. There is a change in objects of memorandum which is there, which allows RCF to get into not just agrochemicals but also into renewables and others. So if you look at there's a trend of all PSU companies now having a concerted effort to have a renewables subsidiary and bring in renewable as part of their entire portfolio. So that's something in the future. But more than that, it's a land monetization which is expected, which they have in Trombay and Thal, and that is a big parcel of land, around 200 acres. Is that?
It's 2,000 acres.
2,000 acres.
And around 1,220 acres in Thal and around 750 acres in Trombay. And out of that 750, 277 will be monetized pretty much immediately. At least that's what the plan says at the moment.
Well, Sandip is still with us. Sandip, how do you look at some of the PUC companies, the strategy to diversify into renewables for many of them?
So I think,
yeah,
like
Sandip,
very little to say. Yeah, very little to say on that because I think it's more of a fad which is happening where all companies are doing something on renewables, on the private sector, many are getting into defense, etc. But I don't know how that adds value to their core businesses. It's very tough to evaluate these companies in this manner.
Sandip, thank you very much for joining today. We hope to see you on Thursday as well.